Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360 degrees trades. I am Sagar Nandi. I am an active trader and I use only one trading system that I developed myself, Q. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on TradeStation and Metastock platforms. It has multiple components. Let's start with Q charts, instruments that often move the market. Dollar index, it is continuing to be in a downtrend. As I mentioned in the past several market recaps, it will break the downtrend and there will be a case to be bullish only if the memory trend line can be broken. It is about to break the memory trend line. If it breaks next week, it may be considered bullish for dollar index and that may put pressure on the stock market, though that inverse correlation does not always work. The other market level instrument that moves the entire market without failure is the mega cap custom index. When price came to the weekly trendline support in the mega cap index, that was the time to buy. That was what I mentioned in the market recap at that time. And subsequently, there was a trendline resistance here. In that recap, I also mentioned the time to buy would be again when that trendline resistance was broken. So in that way, I used both the support line and the resistance line. Bounce up from support and breaking of resistance. The breakout worked again and mega cap custom index rallied. That certainly helped the market. Also note the pattern of being at jump thrust low, unsustainable down move followed by big move up 3. That is, somebody, bigger player, much bigger than me, stepped into a sharply falling instrument. More often than not, it leads to an up move, and that happened here once again. Is it the time to buy now? Not for me. I would prefer to buy when I shared the bounce idea and the breakout idea. Now the stretch band indicator is showing it is overbought for too many days. I don't like to chase an instrument like that. It is certainly bullish. It was bullish in the last market recap also, and it is also outperforming the market, shown by the relative performance sharply tilting up. Bullish does not mean it is a low risk entry point in my way of trading. Let's look at the market's internal breadth now. Usually the market follows the internal health, not the other way around. Sorry, I was on mute. Let me start again. Q, market breadth total view, broadest view of the market. When the market was falling, we had the bingo signal, indiscriminate selling, and right after that came Eureka signal. That was the bullish day, and it had large accumulation count, the largest accumulation count possible, 6. But as I mentioned at that time, I did not buy on that day because my trading philosophy always looks for low risk entry point. That was not a low risk entry point day, stop would be far away. Instead, I waited, and then we had another large accumulation day. That was a low risk entry point. From that, price went up. Notice also, looking back, and it is important and valuable to look back how these market breadth oscillators work. 3-month new high low, thanks to Dr. Jeffrey Scott, after watching whose videos I started using it, and percentage of stocks above 50-day moving average. Both were extremely oversold, so much so that a pullback was likely, and that happened. Now probably people are buying here, people could be buying last few days, but very few people bought right at the bottom. I did, and I mentioned it in the market recap at that time. I shared it in WhatsApp chat with some friends also. They didn't believe as usual. Amazing, isn't it? How often people see it works over and over again, but equally often they are not able to capitalize on it. In any case, price went up. Now the 3-month new high low is in the bullish territory. The percentage of stocks above 50-day moving average is clearly trending up. Is it bullish and low risk entry point now? Let's look at the weekly daily to decide that. Weekly is clearly bullish, but it is also overbought. So I am not going to buy it now. It is bullish, but it is overbought, shown by the stretch band indicator. Close there. I will not look at the other indexes for market breadth, the composites and the major indexes, but I already tweeted them on my Twitter page. Superior profit. If you go there, and I want to go there and point out once again on total view the extreme oversold level that happened 1 month ago, but not only in the total view, in the composites, both Nasdaq on the left, NYSE on the right, the extreme oversold condition happened at the same time, and on the major indexes also, from Dow Jones Index to Russell 2000 to Nasdaq 100 to S&P 500 to S&P 1500. These oscillators work so beautifully, it is surprising why people, even those who have access to these, are not able to capitalize from it. I have learned and trained myself to trust this. Not that it will work every time in my lifetime, but it will work often enough to give me some profit. External view of the market. This is how most people around the globe see the market. SPY, looking back, and these trend lines work beautifully. Trend line support in SPY worked beautifully in weekly and daily both. The time to buy could be at this point. I did not buy here, as I mentioned several times. This was a low risk entry point, and I cannot emphasize enough the importance of buying at low risk entry point. Psychologically, it is much easier to hold the trade and also to cut the loss. In any case, SPY is also overbought now for me to buy. That pattern will be in all the market ETFs. This is QQQ, same thing. DIA, less bullish than QQQ and SPY, just broke out of the trend line resistance in daily, but it is also getting overbought. Not as much as others, but it is also looking weaker than the others. I would not like to buy the weaker one. Bullish nonetheless. And IWM, still in a triangle pattern, in the middle of the triangle pattern. This is also looking weaker than SPY QQQ, and the reason is clear, isn't it? We saw earlier mega cap custom index was hugely outperforming. That has maximum influence on QQQ followed by SPY. That's why QQQ and SPY are stronger. Across the board, of course, the market is bullish, but some are stronger than others. My conclusion is the same across the board for all the market ETFs, bullish, but I would not like to buy now, not looking at the market level. Bucket analysis, thanks to Dr. Jeffrey Scott again. Dr. Jeffrey Scott is in the YouTube now. Thanks, Dr. Jeffrey, for joining. This is another tool that works so amazingly well that it is surprising why people cannot capitalize on it. And I know the answer. The answer is the psychology part of the trading game. It is not just technical fundamental analysis, it's a psychology game, and it's easier in my view to master the non-psychology parts, the technology part, industry scorecard, even fundamentals. It is more difficult to master the psychology part. Other than that, I don't find any reason why people are not able to capitalize on it. And I look back on my own experience, why I could not capitalize on it earlier was for the psychology part. When everybody is panicked, it is difficult to buy. But nowadays, I am much better, as you can see from the market recaps. In any case, let's look at the bucket analysis, and then I will look at the sector industry stock breadth, both from Q Edge. I'll be using Q Dives, that is Q Edge, also on Workspace. It's working fine. Sometimes there are issues, but overall it is working fine. Sector industry stock breadth shows where the market came from, where it is now, where it may go next. Bucket analysis, when the total view was extremely oversold, bucket analysis was also extremely oversold. Many stocks, most of the stocks were certainly below the mid Bollinger Band, many stocks were below lower Bollinger Band, and Dr. Jeffrey Scott showed that in several of his videos with historical analysis that I don't have, but he did excellent analysis. I followed those. And now it has shifted to the right, as he says. From being extremely oversold, now 85% stocks are above mid Bollinger Band. And it is bullish but not overbought, because the percentage of stocks above upper Bollinger Band is just 8%. It has to be 30, 40, around that to be overbought. So it is bullish, not overbought. That allows buying. And if I look at the sector industry stock breadth, 1 month period longer term is still bearish, but all the other periods, 10 days to 5 days to 2 days to 1 day, they are bullish. Is it too long a stretch to buy now? Too long a bullish stretch? The other market ETFs, the total view, all the analysis is showing it is overbought, but overbought condition can stay overbought for a while. There is no bearish signal, at least. That is what we can conclude. QFinder technical breadth. Interestingly, in the last week's QFinder weekly chart, I pointed to the bullish headwind alert. Now the bullish headwind alert is not there. Last week it was there here, and that usually signals that the market will go up further, and that happened. Last week's bullish headwind helped me to remain bullish. Now, of course, the weekly is bullish across all the categories, all the dimensions, and the daily Friday is also bullish across all the categories. The maximum percentage of bullish trade setups are coming from price extreme middle. Maybe we'll look to find some bullish setups from price extreme middle. Sometimes people ask me, do I only buy from price extreme low? No, those are lucrative buying opportunities because the low price levels can lead to not only profitable swing trades, but sometimes they can be held much longer, lucrative buying points. But price extreme middle is also equally good for swing trading, and some traders like to buy at high price level too. That is not usually my choice, but I am very much okay to buy in the middle price level and low price level. Market level summary: the most important trading decision is whether and where to buy or short, or whether to stand aside. My conclusion is that it is bullish, it is overbought. We may probably still buy, but may be careful about buying. Choose stocks where the risk level is not that far away. I mean, the stop is not that far away. Review of last week's trade ideas. I shared only one stock in the last market recap. The same stock that I showed in the previous market recap also, that was ODP. And see how it progressed. I first shared it when the weekly had 3 bullish indecision at the low. One was yellow candle, and the next two were already cyan bullish candles when I first shared it in the market recap. In the last market recap, I shared it again. It had a bullish candle. If I could expand a little bit, I shared it again in the last market recap. It had yet another bullish indecision at the bottom. A cluster is always more valuable than an isolated one. And indeed, price went up further this week, and you could keep on buying if you wanted to at the low when it was trying to go down and come up again. Notice what is happening in the daily. I always try to honor, respect this trend line support and resistance. I bought at the bottom and I was aware of the trend line resistance. It came near the trend line resistance and it is now starting to display bearish indecision cluster in the daily. And I closed the trade with a profit. I may buy it again, but I don't want to hold a position when a trend line resistance is nearby. This was a bottom fishing opportunity, and as you can see again with live example, I always share trades or analysis before knowing the results. This also worked again. Disciplined entry, disciplined exit. Or so I think. This week's trade ideas, we saw majority of bullish ideas are coming from price extreme middle. So why don't we try to find some trades like that, and you will see how I use the different Q components in choosing a stock. Suppose I want to buy only one stock. Now I will not have time to go through the entire list. So let's go to bullish setups in Q Finder. I'm going to use the paintbrush to choose stocks in price extreme middle. I ran Finder on all the liquid stocks, 2000, about 2000. Now I am left with 197 only. Now let me also demonstrate something. I think I can still finish it within 30 minutes. I want to demonstrate something. From these 197 stocks that has possible buy setup, I could do one of two things regarding stocks fundamental scorecard. I could generate a scorecard of these 197 stocks, or I could have already created the stock scorecard for all liquid stocks. I have already done that, the latter. That is, I have already created a scorecard of all the liquid stocks. Then I don't need to send those 197 stocks to Q Vital to generate scorecard. I have already generated the scorecard for all liquid stocks. I could simply look it up. So instead of pressing this peer analysis button, when you see there is a border, you can notice the difference between this icon and this icon. This has a border, whitish color. This has a border. This is a border. Whenever you see a whitish border, it has dual purpose. Usually uses, you just click this, it will take this 197 stocks, generate a scorecard. But if you press shift, it will look up the scorecard from already generated scorecard. And by the way, if I go to daily, if I switch on the help message, green is show message, don't do anything, red is show message and take the action, black is don't do anything. You may toggle through these options. Let me go back, make it green, come here, I'm going to shift click. See the help message, carry out peer analysis slash or look up stock scorecard using QVital. So I'm going to use shift click. Let me go back, disable the help message altogether, press shift click. See, instantly fast, isn't it? Those 197 stock scorecards are looked up instantly. I think Workspace is faster than Icon, and I also almost redeveloped from ground up the QDives, that is also making it faster. So in any case, these are the stocks. Look for up stocks. Probably it was not required because they had some buy setup anyway. Look for 1-star at least buy candidate. Make one click again to look at its industry scorecard, all these stocks, left with 77 stocks you can see here. Now market is looking quite bullish. I could look for strong scorecard or most accelerating. Let's stay with that. Or if you wanted, if you want to do step by step, you could again, you notice here I'm explaining something. Here you can see again the whitish border style. That means it has a shift operation. Shift operation is and now it is strong score or accelerating. If I shift click, you will see the list will reduce. Now it is not only strong but accelerating too. See what I found finally. A few industries that were clearly lagging earlier, now they are some of the strongest industries, that is shown by acceleration. Because the market is looking overbought, I would like to focus on these industries that are strong, but also they are recovering from a lower price, lower scorecard, you can say. So let's look up the stocks in these 4 industries only. We had 77 stocks. Now we are left with 7 stocks, isn't it? If I was not talking, I could do it only in a minute or so. From few thousand stocks, I could come to 7 stocks. And let's look at their scorecard again. By the way, that button also had a shift operation. So these are the few stocks. We could look at all of them. Let's look at all of them. I'm going to get the ticker symbols to QElite. go through them one by one. ARM, clearly bullish. It is looking similar to the market ETFs. Stop would be too far away for me, and I don't like a stock with the white direction line just above it when it is already overbought. Okay, let's find another one. I'm looking always looking for lower risk buys. UMC, I don't like, I am explaining exactly how I trade in my real account. I don't like this long upper tail candle and this trend line resistance both. Yes, in recent days it is going up, but I don't like this upper tail. So let's keep that. YMM, I like this one. I'll come back to this. I'll come back to this why I like this one. Let's remove ARM, which is too overbought. UMC, a long tail candle, I didn't like that. Let's look at AMBA, next one, Ambarella. Again, it is also recovering, but the yellow direction line is coming down, not very far. I am not preferring that. Next one, LNC. Same story, the yellow direction line is declining and just above the closing price. Not a stock I prefer to buy now. Not that it cannot go up, but I don't prefer to buy stocks like that. Given another choice, and I found one already, I'll come back to that. This is MET. I don't like the trend line resistance, and also I don't like the white direction both right at the closing of Friday. Last is BYD. Of course, I don't like it because of the trend line resistance. Good, that's not bad. So I am left with one stock, YMM. Cool, I like this one. Why I like this one compared to the others? There is no trend line resistance. There is open space. There was a gap down move. It is possible that the gap will be filled. That will cover the risk distance. I could put stop below this ascending direction lines. And notice here, unlike some of the other stocks which I rejected, price is above the yellow direction line, above all the direction lines in fact. White direction line is far below many of the direction lines. See here, it has a proper flow trend following buy setup, and remember what I mentioned in Twitter also, I was going to look for buy setups at price extreme middle, that is shown here. And I would like to open it. This is YMM. Let's open it on Q Global. And while it is opening, now I want to look at its one page scorecard. Good, that looks great. I like it. Nothing is there not to like it. 100% of peer stocks went up on Friday. Funds are bullish. If you would like to care about analysts, they are bullish. There is a short squeeze potential, high earnings growth, respectable revenue growth. It's a profitable company, whichever way you look at it. If I look at its industry score, now see I am isolating this single stock before placing the buy order. And of course, it is also one of the strongest as well as most accelerating, nicely recovering cargo ground transportation industrial stock. Okay, why I came to the stock on Q Global is to see the commentary. If you are new, probably you are not, to Q systems, you could read the commentary to analyze the chart exactly as I would do, as Q systems would do. It shows it has a possible trend following buy setup, and if you go down, you see most of them are green. It is saying it is stretched to the upside. It is also overbought, showing it is here, but I am okay to buy in this case because I will put stop below all these ascending direction lines. That is how I find trades, and equally importantly how I isolate one stock from other stocks, looking at all the dimensions. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today just as you would almost every other day. Of course, as I mentioned, market level is overbought, so I'll be cautious about buying any stock, including the one I shared, YMM. Thanks a lot for joining me today. I look forward to seeing you in my next session. Have a great weekend, and as I always say, as these live examples I'm quite confident shows, there is no reason not to do that. Trade profitably. Thank you.